Hello guys, and welcome to another episode of the Accounting Valley with me, Brana. Guys, if you're new to the channel, please hit the subscribe button and also give it a thumbs up so that you don't miss out on any future videos. So today I just want to briefly give you an explanation on how financial statements are compiled in the real world. This is a manual way of doing it, which means I'm not going to be receiving assistance from a software like your Pastel or Zero Accounting and all those other softwares that are used to make the job a bit simpler. So this is what you typically receive from a company, depending on the size. So this is a small to medium company. These are their financial statements, 12 months, right? For the year ended in February. So what you're supposed to do, or what we do, we take every individual financial statement. Yes, I know it's typo. We look at all the items here, categorize them on the computer. From your revenue, you identify the revenues, you identify your cost of sales, you identify your telephone expenses, all those line items, your bank charges on the computer. You actually create a spreadsheet. I'm not sure if you're going to be able to see the kind of spreadsheet that I've done here, guys. Let me see. Yeah, but mine is not complete, right? So this is the kind of spreadsheet that you actually create, right? And after you create a spreadsheet, you make a total of all those balance. And I do have to stress, this does take a lot of time and a lot of concentration. I mean, it's literally like one item per line, so you really have to be careful. This is why accounting software was actually developed. So after you've made your totals, you post them on your trial balance, right? I prefer having a detailed trial balance, something that looks like this. This is my trial balance. I apologize for the quality, guys. I don't really have a good phone right now, but I think that will change soon. So after we've done that, and if you've checked for all the errors, now after you've done all that, you can post the trial balance amounts to your statements, namely the statement of profit or loss, the changes in equity, your balance sheet or changes in financial position, and also your cash flow statement. And then we are going to have our notes just to explain what we did in the statement of financial position. So it also depends if this is your first time compiling the statements for the company or you've been doing it previously. So there's challenges that come with that, but where there are some misunderstandings on the statements, we usually give the client a call so they can clarify where some of these amounts come from. So because it's very important to give a true reflection of the company's finances in case these statements, or when they do get audited, because if you are found to have misled the end user, because they could be using the financials for maybe applying for finance and overinflating a revenue and understating costs, those kind of things. I'm sure we've seen a lot of those things on the media, guys, but just to bring it home, guys, that's just how financial statements on a manual way, right? I do note I said manual, not systematic way, but most companies, the bigger ones, actually every time a transaction is happening, it's actually updating on the ledger, so it makes compiling financial statements just a little bit easier. So guys, I hope you enjoyed this tutorial. There are more tutorials to come. Just hit the subscribe button and give it a thumbs up, and I'll see you on the next video. Bye bye from me, Brana. Nda.